Okay, so you should be able to see the screen and sound should be coming through okay. Yeah, so as you see in the chat, if you have any questions, certainly put them in the chat. Also, if you have markets you want to go over that you can put that in the chat as well. I've got a whole list here to cover with you, but we have more. If you have more, just put them in there, not a problem. So for those new to the sessions, what we do here is we cover one strategy, any and all markets, any financial purpose. So daily income, weekly income, and of course building and protecting that longer term wealth. So we're not limited to any one set of markets, stocks, futures, Forex, and options. And the strategy that many of you are aware of is all around supply and demand, identifying price points in various markets where prices are at levels where supply and demand is out of balance, and there's a significant amount of room to an opposing level, meaning another way to say that is, prices are at wholesale levels and retail prices are much higher, so we can, trade that, focusing on low risk, high reward, and high probability opportunities. So I know some of you have been in these sessions before, so you understand what I'm talking about, but if you're new and you have questions, just go ahead and ask. And again, I can start with any set of markets. Why don't we start with the Forex markets, since this is FX Street, but we can always branch off to just about any market you can think of. Okay, so let's give me 1 second here, and then we'll get started and do that. Yeah, no, it's great to be here. Great to see you, Raphael. Everybody else. Yeah, we can go to the EuroCAD. Let's start. Why don't we start with the U.S. dollar? So, the most important market that we'll ever look at in these sessions is the dollar. And for those of you that have been with me for many years, you know that big picture, we almost always, and I would say I can't remember a time where we didn't get the dollar right, especially larger time frames. And this is our, I'm showing you the weekly chart of our levels in the dollar for the past few months. And right now, obviously, the dollar is wedged between the supply and demand zone that you see on the chart. However, that supply zone, it doesn't appear that there are significant amount of there's a significant amount of supply left up there, right? We've already hit it, come down to demand, and so the next time up to that level, the point is we'd want to focus on this area right here. So I'm going to go ahead and put some lines around that level, and that becomes our next supply zone. And when we do this, we apply our very simple set of rules that determine where we put our exact zone. Okay. All right, let's keep going. So when we come down to, for example, the daily chart, you could see what we have above and below. But I want to go down and focus on this time frame right here. What you'll see, so these are levels that we have. I also do sessions in the mornings at Online Trading Academy, and you could see price. So these are levels that we've had on the chart, and you could see that price is in the middle, in between those two zones. Now, why is that important and significant? Because when you think about supply and demand, this is all just, again, just basic supply and demand 101. When price is at the extremes, those two levels you see on the chart where supply and demand is out of balance in a big way, that's where the odds are stacked in our favor, the risk is low, and the profit zones are big. When you're in the middle, you don't really want to do anything. Odds are low, and your profit zones are small, Okay, so we need to just recognize that that's where the dollar is and kind of move on from there. When we go to the euro, it gets a little bit cleaner. Remember, tomorrow there's an ECB press conference, so that's gonna be an issue. John, yes, this means that this isn't a good time to initiate a trade in the euro dollar, unless something else develops. I did have a 5-minute level to look at here. Let's go to the 5-minute chart. There you go. So if we do get a little bit more of a rally up to the 114.45, right, 114.45 to 47, of course you'll add a little bit onto that, and then above that, two really nice levels on top of each other. But in here, yeah, we probably don't want to do anything. And to your question, right, make sure you understand that when you look at a chart, there's only two things that you should be seeing. Every candle, every set of candles represents one of two things. It's either unfilled orders or filled orders, right? So why is that significant? Well, the two questions that we're trying to answer with all this are, where is price going to turn and where is it going to go? Okay. On the first one, where is price going to turn? That's the unfilled orders, right? Significant unfilled orders, buy or sell orders, cause prices to turn, right? Your big supply-demand imbalances. Filled orders, meaning a lack of supply and demand, facilitate price movement. Does that make sense to everybody? If there's no orders on one side of the market or very few to stop prices from moving, it's going to keep moving. So if you look at the chart, you look at the yellow boxes, those represent key significant supply zones where banks are clearly selling the euro. But look at all this price action that I'm circling here with the mouse. See that with the arrow? What does that picture represent? Does that picture represent filled orders or unfilled orders? What does that picture represent? Filled orders, exactly. So we expect prices to turn where the unfilled orders are. And when prices get back to where the filled orders are, it just facilitates price movement. Okay, and you'll see this more with some trades we took recently. All right, so watch for that in the euro. Other than that, there's not a whole lot to do or focus on. I know in the morning sessions that I deliver, some of the group is still short from the 116.17. That was our supply zone up here, and prices slowly moving towards the profit target. So this is a nice big risk reward scenario. But notice we stayed out of this. You don't want to be entering positions in all this. Okay, clearly orders are filled there. There's a lack of unfilled orders. So you don't want to initiate positions, in that scenario. Okay. Let's move on. So let's move on to the Aussie dollar. Let's go right to the 60-minute chart. And it doesn't look like there's anything here, but when you look just above all this price action, you're going to see that there's some key supply zones that come up pretty quick, starting around 72.66. Now I'm showing you Forex futures. We haven't looked at any spot markets yet, but these are all exactly the same levels in the spot market. Okay, exactly the same. Okay. So watch for that if we get a nice rally in the Aussie, and I think there's a big number coming out soon in the Aussie market, which is unemployment. So just be aware of that. In the Canadian dollar, let's go to USD. Let's go to the spot. And I bring this one up because this one's meeting entry again. So here's a level that we traded off of the other day. Price went up to supply, came down to demand. Now we're kind of just back up here and coming off this. We'd be comfortable, or I'd be comfortable taking this position again, because if you look at the first time price came back to that level, just really yesterday, it barely touched the level and fell. So again, that's a clue that banks are selling lots in this market right up at that price point. Does that make sense? If price would have went much deeper in this level on that pullback, we wouldn't be saying that. We wouldn't be taking that trade again. Okay. All right. So yeah, this one looks okay to take again, and now you have potentially a bigger profit zone to the downside. In the morning sessions, we have oh, not there. Let's go back to the futures for a minute. So this is a level that we had last time, even with our FX Street session. I don't know if anybody in our group here is short from this level. Anybody take this trade? There was a number, an interest rate number that came out in Canada, caused prices to shoot up this level, meet entry force, and now prices are falling. This trade is just getting started, but if you're in this, always best to just stick to your plan. I do have a couple more daily income opportunities. So if we look at the 5-minute chart, we're going to the Japanese yen now. Up around 91.74. There's a little supply zone there. And that's the beginning of 3 or 4 levels on top of each other. But you see that? So watch, if you go to the spot yen, you're going to see the same levels, only they're on the demand side. Okay, here they are. That, and that. See that? Okay, these are all futures, and the spot market as far as Forex goes. It's not like it's a different yen or a different Canadian dollar. It's all the same currency, right? It's just the trading vehicle is different, but still the same currency. Okay. So watch for those levels. And then in the British pound, let's go over to the British pound futures. This one's moving in the wrong direction, so we won't spend much time here. Okay, we have some demand below, but the pound at this point would have to fall pretty far to get there. Keep in mind, though, there is some overhead supply to deal with, especially this upper level. Don't want to spend time on this now, but if and when price gets up to the 135.10, that looks like a great level to sell short from. In the meantime, we can buy pullbacks to demand zones, for price to move higher. Okay, does anybody have any other Forex markets they want to look at? You want to look at the Euro CAD? I see your request there. We can look at that. Let's pull that up. Just waiting for a couple more charts here. Okay. What is going on with these charts? Let's see, we'll give it another few seconds here. Okay, here we go. Euro Canadian. So we always want to start with the larger time frame. When we do that, we see we're coming off a little bit of demand, but we have supply just overhead. Very important to know that right off the bat when we start doing our analysis on this market or any market. Okay. As I come down to smaller time frames, all right, you can see we just had a pullback over the past few hours into demand, and now we're moving higher. But here we're looking at a 4-hour chart. Supply and demand zones start to develop. I mean, there's supply demand zones kind of all over the place, but which are the ones that have the most demand and supply, where banks are buying and selling and all that, right? All right, here we go. So those are, even though there's other levels, those are the key levels where banks are buying and selling, right? Where there's unfilled buy and sell orders there. So those are the areas that we want to focus on. Now, price isn't near either of those levels. It doesn't mean we don't have any trades we can take. So let's go down to a smaller time frame, but at least now we know where we're at and where price is at in the bigger, supply demand picture. Okay, we can actually look for longs or shorts. When we do that, we see that there's two areas of supply here. Now I'll take a little time here and help you understand why you choose one zone over another. Okay. This, to some people this might look like a zone. We probably wouldn't take it because it's already had one pullback and because of the price action to the left of it. However, there are two other levels that we would be very interested in. Specifically this one right here and this one, which we won't spend time on because it's so far, that one right there. And you look at the Euro Canadian. Okay, so there's that one, and I'll explain these a little bit more. There you go. Okay. Initial profit zone on both of these looks really good. When I scrunch the chart up to try to find some demand below, we don't really have any significant demand until that larger time frame demand. So trying to get 3 or 5 to 1 out of these initially looks very doable. And if anything, the risk is very low. Does that make sense? Okay. All right. Let's go to the Aussie yen. And there it is. All right. So here's this one. Let me come back to this one in just a second. I just want to check something. We had a little supply zone right here we were looking at. Let me just get the lines in here. I just don't want to forget it. That was a level we had earlier this morning. Okay, so we save that, and let's go back to our Aussie yen. Okay. One thing I see with this daily chart is this big wick to the downside, but I don't know if that's, yeah, there it is. Okay. So we have a couple good levels here. Again, neither of these are that close to current price. Well, I guess the upper one is. Yeah, it's actually not far at all. So for those that are new to this, the way that we, find these levels, it's all a very mechanical set of rules. We start with current price, go up and left until we reach a level that's fresh. Okay. So that's a good level, but price has already been there. Right? So those orders are probably, well, there's not as many orders there now as there were, prior to price hitting that level. Whoops, I didn't mean to do that. Let me get the rectangle in here and then we'll move on. So that's what we have above. And on this time frame, we also have the luxury of seeing where some demand is, which is right here. Okay. Unfilled orders are the yellow boxes. Filled orders is much of the price action in between those yellow boxes. Okay, just pure supply and demand 101. And ultimately in any of these markets, prices typically just move from fresh level to fresh levels. Okay, let's go to the 1 hour real quick. And we can look at your 79.97. Oh, so you're thinking this one right here. Let's make sure it's fresh. It looks pretty fresh. Okay, that one, right? Is that the one you're talking about? Yeah, that one looks fine. And again, a nice big profit zone is open up to the downside, right? Okay, well, I think we're good on the Aussie yen. Let's move on to another market. Let's see, where do we want to go next? I've got a bunch of markets here, but you want to look at the Euro Canadian. Oh, didn't we just look at this? We did. Okay. All right, so let's keep going. And let's go to, oh, why don't we look at oil? I guess oil hasn't done a lot in the last, So we have some great levels to look at in oil, but it's not close to any of them at the moment. Let's go to, and again, I can go to any market you want to. I've got a big list next to me with lots of opportunities, but let's take a look. Why don't we look at gold? So give me just a second here. We'll get the gold chart up. All right, the chart's taking a minute. Try to click on that again. Let's see. Before we get to that one, let me give you another one. So we're looking at New Zealand Swiss. And this is a trade that's much closer to meeting entry. There's actually, you might have actually two different opportunities here. So take a look at this one. We're looking at a small time frame. This is more of a daily income type trade. Obviously, the higher level is the higher probability one. There we go. Let's get a little box in there, and then we're all set. Okay, there you go. So I don't know if anybody trades this market, but there's some nice levels there. And nice big profit zone in this one, too. You're going to have to get through this, but this shouldn't be much of a problem. Okay. And you could see the price action right now is absorbing some or all of the demand over here. Okay, that's key. All right, so let's go back to gold. Okay, so there we are. Yeah, supply and demand, it works in any market, of course, any time frame. The reason we look at the different time frames is simply because we want another different view, a different angle at one supply and demand equation in that market. It's not like in every time frame there's a different set of buy and sell orders. It's all one set of buy and sell orders at different price points, right? So if we come over to gold here, let's go through, whoops, didn't mean to do that. There we go. This one met entry for us much earlier this morning, but I wanted to point, I guess it's already hit this too, but there was a nice little demand zone here I wanted to share with you, but it looks like it's already met entry. Let's just make sure. Yes, it did. Okay. So if you do come back down to that area, which can really happen, it won't be unlikely if it does that. It's low risk, very low risk. Yeah, 1 minute charts, yeah, but it depends what market you look at. Okay, if we went to like a 1 minute of the S&P or something, that's a different story. So there's the 1 minute. Let's see. Yeah, I mean you could see a bounce from this area. So let's see that. But at the same time, you have supply not far above. Okay, let me just grab this chart. Oops, there we go. Anybody have any other markets they want to look at before I go back to my list? Not a problem. We've got a bunch more. We can look at bonds. Why don't we do that? Yeah, you know what, these, let's see. I'm trying to find something a little bit closer to current price. The one thing you want to know too is, you see this supply zone up here? So some of our, some of our mastermind members took this trade. But there's two types of entries. Not entry types, I should say, but there's the trading opportunities that meet entry right away, and then there's the trading opportunities where you see a level out there and it's this big kind of U-shaped price pattern to come back to it. Most of the time, your supply and demand zone or level that meets entry quickly after it was developed, those are going to have a much higher chance of working. The odds on those are much greater. Does anybody have that experience? I mean, you'll definitely see that as you go along, but okay. All right, let's go to this NASDAQ again. Actually, let's take a look at the S&P. And again, if you have another market you want me to look at, just let me know. Okay, so here's a small time frame chart of the S&P. I thought I had a level back there for you. I guess I don't. All right, what other markets do people trade here? Or is it just Forex? Let's go to, okay, that's all right. That's fine. So I just pulled up the Euro spot, but that's not what we're going to look at. So again, when markets are in the middle like this, well, like that, or it's very easy to see on the weekly chart. Okay, when you're basically trading from supply down to demand and there's not a lot of room, meaning this is where I would have no interest in taking a trade when price is right here, meaning where it's at right now. Does everybody see that? This is so important. You don't want to initiate positions in the middle. You want to initiate positions out at the extremes. Okay? Most people are afraid to do that, but that's how, you look at people that make money at this, that's what they do. Okay. Let's go through more. Here it comes. Okay. There you go. So here's the pound dollar. Okay. Now, why bring this market up? Is a daily chart. Let me just make these lines black. And why did I bring this up? Oh, yeah. This level right here. Whoops. That's not what I wanted. Here, let's do, where is it? Oh, yeah. Sorry. Let's bring this in right here. Okay, and then of course we have a level sitting just above, right there. So for Michael, for the Forex markets, I primarily trade the Forex futures. If I were to trade the spot market, I don't know exactly which I would use, but primarily do the futures. And most of that is through TradeStation. Okay, most of that's through TradeStation. Okay. So watch the pound dollar. Again, really good levels up there. This is a daily chart, so it's going to take time to get there, but sometimes we're not together for a while. So I wanted to make sure that you had those. And let's go back to our, oh, I know where I wanted to take you next. Okay, just waiting for the 60-minute chart to pop up. We're looking at the Aussie dollar spot. So we're focused on quite a few more spot markets this time. And again, we're just applying our simple rule-based strategy. The reason why futures is because, look, to me, the spot market is fine if you're holding on to positions for, that weekly income or building and protecting that longer-term wealth. I would not use the spot market to day trade Forex. That's going to be tough on any platform. Okay, and that's because you have that spread to deal with, and there's not one giant centralized Forex market. It's many, many, many sort of smaller Forex markets. They're all representing the same market, but at the extremes and things like that, and at the down in the detail, they're a little bit different. So, whereas if you're going to day trade the spot Forex market, I found is much easier to do through the Forex futures, not through the spot market. Okay, why? Because there's a centralized exchange. So it's a centralized order matching system, the Globex system that you're trading the Forex futures through. And it creates a more kind of level playing field for everybody. Does that make sense? Okay. All right, let's look at the bond market. So this was a trading opportunity that, well, first of all, this was a trading opportunity that a bunch of us took in the morning session off the daily chart. Specifically, yesterday into today, a bunch of people took this trade into our supply zone. But again, notice the white space, the white box represents filled orders. The yellow box represents unfilled orders. Okay. Now, why bring this up if this trade has kind of already happened? Well, it did happen, but notice price just touched the level and turned its first time back. Right? It just touched the level and turned its first time back. What that suggests is, and we call this kind of I call it kind of the secondary evidence, right? Because of the price pattern itself, right here, the yellow box. I strongly assume that there's going to be supply up here, unfilled sell orders. But then when price comes back and barely touches the level and falls, and you have all this white box data, yeah. Oh, we could take another short into this level. That was my point. Because you'll see a lot of people say, "Oh, don't take it again. It's already been there once, or it's already been there twice." The amount of times prices come back to a level for a buy or a sell is much less important than how deep price went into a level. Because inside each supply or demand level, there are many price points with many orders, right? So, okay. Any questions on that? Any questions overall? If not, let's okay, there you go. So let's see. This one hit our level again. That's okay. So here's the let's go over to an equity index market. So instead of looking at the S&P and Dow like everybody else looks at, why don't we look at the NASDAQ and S&P. Why don't we look at the Dow? And I don't know that this level is going to meet entry today. Not likely. But the 24,165, if you do trade this market or the futures, it looks like a decent little area. You'll be making a new low below that low, which will trigger most people to sell. Okay. All right. Let's look at a couple more here. Okay, so oil is getting oil is traded off our demand nicely and has now rallied. If it rallies a little bit higher, it'll be into that supply zone. This is oil, and then even a little bit higher for a really nice level as seen on the daily chart. A number of you trade oil, number of you trade markets related to oil, and so on and so forth. Okay. Let's see, I see your question there. What is extremes in market? Meaning, what are the extremes of a market? Those are your supply and demand zones that are kind of way out there, right? In other words, and it is very rule-based, your supply and demand zones that have a big profit zone in between them. If you want me to show you, this market's really moving. Okay. So if you look at some of these, here's the NASDAQ, right? So this is a level from our morning session today. Price came into the level and it's falling. But notice we don't have any demand until, and I'll show you it here, any significant demand until the, 62.60-ish. Okay. So I would say those extremes are defined by your larger time frame, fresh supply and demand zones. Larger time frame, fresh supply and demand zones. Does that make sense? Okay. All right. Okay, good. And then look at my notes here to see what other markets to go over, but I think we're pretty good there. There's that. Okay. So if you I don't know if you could see what's on the screen now. There we go. So this is the cover page for the morning session that I do every day. And I want to make sure that I bring this up because my email is in the lower right corner. If you have any questions, any comments, just email me at sam.seiden@tradingacademy.com. That's sam.seiden@tradingacademy.com. Okay, you can also follow me on Twitter if you want, Real Sam Seiden, if you're a Twitter user. And if not, that's okay too. All right. Okay. All right. So on that note, again, if you have any questions, you're finding any challenges in your trading or anything, feel free to send me an email. I'm pretty caught up on email, so I should be able to get back to you pretty quick. And we'll see you soon. And we'll go over these trades that we set up and see how they worked out. All right. All right. Have a great day, everyone. And you have my email now, sam.seiden@tradingacademy.com. All right. Have a great day, everyone.